All right, we're going to look at the stock market now at the SPY, our 1 to 3 week view. We have been looking for a correction that would come into the end of last week, beginning of this week, and that did come and came very much on time. We have had some lack of clarity in the intermediate patterns, and I'm going to show you right now what will give us clarity in that also. In the meantime, the short-term patterns have been spectacularly good, and I hope you have benefited from using those patterns and all of the momentum indicators that we do supply. Let's take a look here, and we'll look at the SPY, and a little different than I've shown you when I put up the SPX. And here what I want you to see are the repeating cyclical patterns. On the bottom right over here, cycle brackets. Those are just simply a drawing tool that show us the average cycle. So the average cycle period one here is 20 days. And then these vertical lines are the actual. So this is the ideal, this is the actual, and you can see they're very close. And they've been averaging about 20 days. This one was 23 days. There were some 18s in here, and this one was 21 days. Now, this yellow area here was in line with where we thought there might be an intermediate decline. We talked about the potential for a decline of between 4.2% and 6.7%, which was upgraded from our original expectation of 11%. You'll note this was a 5.7% from peak to trough on the downside right over here, but we're still not 100% sure whether or not an intermediate bottom was earlier, because this would be at a 28th or 29th week, which is exceptionally long, or this is actually it. Now we want to note that each of these cycles in here has had seen at the bottoms in here, and when we got the upward turns from where the slim ribbon turned green, and this is the slim ribbon PO giving you the upside signals. Each of those gave you good velocity on the upside off of those lows. We have good velocity right now with the S&Ps moving up some 150 points off of that extreme low on Monday. But something is different. Each of these made new highs when it was doing it very quickly because of the depth of this decline and the negative configuration and the breakdown under that support. Then that only gets you up into the resistance sell zone right over here. So it is different. Things have changed. In addition to that, each of these, and you can see how green this is, and these upward giving you upward warnings right over here, each of those were telling you of positive conditions. And here you're in a negative condition. That is significant. Moving up to the slim ribbon when this is negative is a area where you would expect it to sell and move down very considerably. So here are the important numbers that I want to share with you. If the market is able to keep its legs and keep moving up, maybe have little pullback into support and then move up again and take out 449 on the S&P, that will indicate a intermediate cycle low has formed and things are likely to be stronger, and even the market going out to new highs. If it fools around here for a while, comes down and hits the support zone but does not take out this low at 428.86, it will be a base or bullishly configured cycle, and that would be positive. If it breaks underneath this 78.6 right over here, which is at about 432, that will be a warning that the next rally is likely not to get above these levels, and that somewhere out over here we're going to resume this decline. If it breaks this low at 428.86, the odds are very high of continued very sharp selling. If it breaks this low here at 432, it warns that you're likely not to get above the sell zone. If it breaks out above 449, it warns that an important low is made in here, and though it might base and not go straight up to new highs, at some point it's likely to test that high. So it's, in our opinion, the information off of the daily chart is very important and very clear and will give us clarity on the longer pattern. So you can see our, if you remember, you can see the complex cycle structures on the SPX chart, which has been updated for our members today. So level 4 members, level 4 plus, and the level 3 members will see it in static version when it's posted up in the ranking system. So you will see all of that. That is our 1 to 3 week picture that we see in here. I think it's very clear. The messages will be very clear from the market. And right now, the evidence, some of the evidence is suggestive that it will fail from the sell zone. The question is, will it break key supports, or will it set up a more positive pattern? That is the short-term view for the stock market today. I hope you find that unbelievably informative.